No problem.
I see. So I'm starting the recording now, so we can make this, you know, all like a 1 hour full presentation. So okay,
All right.
next Monday, 1 p.m. Eastern time. We had to move it for today because of personal issues, but 1 p.m. Eastern time next Monday. So that will be Argentina hour 1 p.m. Am I right? Yeah. Yes. 1 p.m. So the first Monday was fine. Now it's Tuesday, and now the next Monday. Already.
Okay. Yeah, that works.
Okay, great. So you
Yeah.
guys, the previous lesson we talked about the average prices, how you identify average price of the day, and why that helps you, why the average price is going to help you. So who can tell me what happened today? Who can tell me how the market opened today on the euro dollar, for example? How the market opened today on the euro dollar? Who can tell me if it is a buy day or if it was a sale day on the euro dollar today? You can see my
I actually missed the lesson on the average price, but I could still give it a shot though.
Go ahead.
Yeah. All right. I think from the activity of the day on the euro dollar, I think it was sort of like a bullish day.
Okay.
Yeah. I mean, just off of looking at the price and the movement, you know, at the open, I think because I really don't have a clue as to how you verify the average price, you know. Yeah.
And does anyone can identify the first hour of London opening markets in my chart right now? Sorin, can you tell me, or
yes,
Caleb?
Yes, it was a buy day today because we started with a big buy candle, 15 minutes.
So it was a buy day in London hours?
What time zone is your chart on? Because I can see the timings at the base, but I don't know what time zone, because at my time, the London market opens at 10 a.m. in the morning.
Okay.
Yeah.
Usually the hour that you see in your charts in your platform is the hours of the servers of the broker.
Okay.
Yeah, the servers of one financial market are in London. So it's going to tell me London hours right now.
All right. I see. So this is a London a London broker.
Yes.
One financial market.
Yes.
All right. So in that case, I think the open of London today was it started, I think it started a little bit bearish, but then went bullish as well. It was a little bit bearish, but then went bullish. It was a quick change, actually, very quick. You know, we had one very little bearish candle, but I don't know on what time frame specifically, because I was looking at it from the 15 minutes. We just had a little bullish move, but a little bearish move, but a very strong bullish move.
Okay.
Yeah.
I don't see where you see the bullish. We actually started it at right after the opening of London market. We just went to a big short right there.
Oh, I see.
And then we shorted again. We canceled the sale.
Yeah.
We tried to buy. We canceled the buy. It was a mess today. Honestly.
Yeah, I was trading UJ actually.
You were trading what?
I was trading UJ, the dollar Japanese yen.
Okay.
Yeah, but it was a mess. It was a mess there as well, also.
It was.
And,
it was
and
not.
it
was not an easy day.
Yeah.
I think the US dollar Japanese yen, it's most of the time like that from what I see in the chart.
Yeah, it is.
But let me ask you a question, Karina, about today. Because looking at the charts again, I didn't see the opening, but I looked at the charts earlier and I missed the very first candle. It had a big tail. It was a sale candle, or a bearish one if you want, but it was a big tail on the bottom side. So the price was pushing upwards. The next two of them, they were bullish, like green candles. The third one in the chart that I'm looking at, the third one was red. The fourth one was even bigger bullish, and the next two, then after that it started to come down.
Okay.
At least this is what it shows on my chart.
Right. But the overall information, who was winning today at the opening hours on the European market? Who was winning? The buyer or the seller?
Are we talking about just the beginning?
No. The full market, the full market. Doesn't matter the first 15 minutes. Who was winning? Who was eating who? The seller was eating the buyer, or the buyer was eating the seller?
But when you ask this question, are you referring to the day up to now?
The first 2 hours of London hours or European hours. I mean, you have to
I think sellers were eating up the buyers.
Yes.
Yeah, I think sellers absolutely smashed the buyers.
So
Yeah, guys, if you see this, there was all the activity today. Check this out. So where are the buyers? I'm going to point you out the buyers. These are the buyers. These are the buyers, buyers, and buyers, and buyers. Who was eating the buyers? The seller. The seller was eating them. The seller was eating them. The seller was eating the buyer. The seller was eating the buyer. The seller was eating the buyer every single time. And so this is US market hours, and they started to push the euro a little bit more. And that was more equal between buyers and sellers, more equal. Buyers here. And
Karina, we seeing your chart right now?
Yeah. Can you see it? You see it?
But we don't see what you pointed.
Yeah. We didn't see what you pointed.
All right, let me change that right now so you can actually see all of it. Advanced trade options. Where do I go so you can see it? Oh, that's why. Okay.
We can see now.
Yeah, now we can see.
So you can see the draws. Okay.
Yes.
All right.
Yes,
So again, like, this is let's go to the pivot points. Okay, we're not there yet, but you know pivots, right? You already know them.
Yeah. I use them intraday, but I really don't understand. I know how they are calculated, how they are plotted on the charts, and I just understand that they are always very aggressive moves from the pivot. So I take advantage of that, but I really have no idea why it works or how it works. I have absolutely no idea. Yeah, I'm using them for a while now.
Okay. Well, but again, the first and most important thing is that even if you're like, don't try to get too into details. You have to identify at the end of the day, this is a great practice. Who is eating who? Is it the buyer got the power today or the seller got the power today in the markets? I'm talking about the euro, and I'm talking about also, let's focus on the euro. Let's forget about everything else.
All right.
Who got the power today? Who was making the profits today? Because I see the buyer just trying to buy in every single low on the euro, but not pushing the price. And then the US market came in, they pushed the price again, but not hard enough to close into a decent price on euro dollar. And by decent, I mean like around the 21.30 at least.
Yeah.
So let's go for the market intervals. So let's forget about candles. Let's forget about all the chart. Let's focus here, because I understand if you're coming from freaking indicators and chartism, forget about this. Focus here, the column of the prices. The prices will shape the chart and not the opposite. The prices will shape the chart, not the opposite. Okay. So let's go here to understand the market interval. So we all know that the euro dollar is shaping in what? Is a buy pressure area or is it a sell market area? Where are we at this point?
Which point are we referring to?
Just the overall information that we talked about it on the first lesson. Are we in the euro in buy pressure area? Is it buy levels or is it sell levels? Are we sell pressure area or we are into buy pressure area?
Oh gosh, I shouldn't have missed that first lesson.
No? Okay, I'll give you just a quick intro about that. So the market gets in March the definition of the low and the high. So are we on the levels of March? Are we above the lows of March or we are below it? That's the only question you had to answer right now.
Let's see.
And let's go to March and check that out. So let's
Yes.
go to March right now. And here we are. This is March activity on the euro dollar right here and right here. This is the high of March and this is the low of March. Are we above?
Well, we're not seeing your cursor move.
Oh, you don't see it? Hold on.
Yeah, I don't see the cursor move.
Maybe.
But do you see the daily S1 and that one? I don't know what you're trying to show us. Okay.
Screen. Oh, okay, that's why. Okay, now you can see everything. There you go.
Yes.
So, this is March activity. This is the lowest levels of March, and this is the highest levels of March.
Yes.
So, are we down here?
We're above the levels of March.
Exactly.
Yes,
So
we're trading.
The lowest of March up to now is all buy pressure area. So we are in buy levels. When the market gets below the lows of March, we automatically enter into sell pressure area or sell market area.
All right. All
Okay?
right.
So March is going to give you the highest and the lowest. From that point, once March is done, you're going to have the lowest levels. And from that point and above, you got all buyers and buyers and buyers. So the common and normal thing is to have just market buying through the year. Through the year, right?
Okay.
All right.
So right now we are still in buying because we are above March.
We are above March, and that automatically is into buy pressure area.
All right. So do we apply this concept month after month or quarter after quarter or year after year? Like in what intervals do we apply this concept?
Once March is done, that's it. You just need March to know if you're trading in buy levels or if you're trading in sell levels. We are not talking that because of that, you're going to be buying every day or you're going to be just pushing. No, we're just making sure that you know what side of the market the traders picked on March, because March is everything for us.
All right. I get you 100%.
Once March is completed, you got the high, you got the low. So we all expect that the high of March get through it to new highs through the year. And then you're gonna have corrections, huge market corrections. And we are facing today, and actually June is the month that typically the market is going to give us corrections. Corrections means that they're going to take the profits out. So that's going to make the price get lower. Then for new buyers to get in, just corrections. I'm not saying we're going to move from buy pressure area to sell pressure area. I'm saying just corrections. So big shorts, big sales are coming. And it's actually started yesterday for the euro. So if you can make notes, please note this. In March, you have the high and the low. March is going to give you the high and the low. The high price and the lowest price, always.
But is the whole month, we take the whole month or still the first 15 days?
Ideally, the first 15 days. Because sometimes it is not shaping enough on the first 15 days, so you have to extend it. But it's very uncommon. 15 days are good enough to know the lowest and the highest. Once the lowest is done, that's all we care, because we know that's the basic, the how you call it, like
the benchmark.
Exactly, the benchmark. Yes. From that point on, it's all buy and buy and buy and buy. That's it. Then, this time of the year, we expect corrections. So you write down June slash July, June, July, corrections. And it also applies for those instruments in sell pressure area, like the dollar Canadian. We are there in sell pressure area. So the correction means the market is going to buy.
So,
Let me help you with your notes. Let's see if I can. Okay, so buy pressure and correction means going down, means seller.
yes,
Instead, in sell pressure, when you
correction means buying.
means buy,
Yeah.
yes.
Yes.
Which we are not saying that this correction is going to take us to sell pressure area. It is just a market correction.
Yes.
How long is gonna last? Well, it shouldn't be past July. It's never past in July. Maybe the corrections are completed in June, and then after June, we start again into buy and to buy and to buy.
Yes, and a quick question, sorry. These patterns or this correction and buy sell pressure areas and sell pressure areas, do they reoccur year after year, or there are some years where it's different, like the cycle changes, or maybe it adjusts a little bit?
Year after year, it's the same situation. And the reason is because there's many things going on in the world right now, many things going on every year that we don't know, we don't get to know, because nobody's going to tell you except someone that understands the economics.
True.
So when you understand the economics from the bottom of everything, you know that institutions, hedge funds, banks, central banks, they review the economy every semester. And every semester, at the break of the semester, they're going to make huge arrangements on their investments, on the location of money, on what they're going to buy for reserves, what they're going to put into the market, everything.
That makes sense, actually. Yeah, that does make sense.
The division of the semesters is a key moment. And I'm giving you the key moment because I know when you might get stuck and get stopped out because you did not knew this, right? Yeah, because we might get blind with inflation rates, non-farm payrolls, but you must go also to know the overall. The now is going to tell you this.
True.
Okay. So March, be careful, it's a very specific month of the year when the institutions, hedge funds, everyone, central banks, they either buy for reserves, the euro, the pound, the Swiss franc, or they buy the dollar to do that, the reserves, depending on how they see the economy. And that's why we got all pushing the euro, all pushing the pound, and everything getting out of the dollar. Then they review the same thing. They review it at the end of the first semester, which we are right now. And they're saying, you know what? Maybe the economy of the US, they're going to try to increase rates for the second semester. So we're going to switch from the euro and the pound to the dollar. To give an example why this is going on right now.
So there are four currencies basically that the central banks look into buying for the reserves. Usually it's the majors and Swiss franc as an exception. The euro, the pound, the dollar, and then Swiss franc. So they could purchase any of these just to put in the reserves in facing up the economic situation.
Yes. Yeah. I mean, the central bank, they don't go just for one currency. They buy plenty of them, even the Australian dollar. So they have.
I see.
And
Karina, let me ask something just to clarify a little bit. When you say semester, that means half a year, right? So they do this review, a major review every half a year?
Yes.
So the March is one of the important ones. So the next one would be like 6 months later?
Yes. So once we are done with the second semester, we got, well, December is a special year. December also moves kind of funny because it's also many.
December moves funny.
Yeah.
Very funny.
So take it as March is where the central banks, institutions, hedge funds, big fishes, they say, okay, we're gonna bet on the dollar, we're gonna bet on the euro, we're gonna bet on the pound, depending on how they project the economy with their numbers. January and February, forget it. There's no big decisions there. Nobody's making huge investments on this in January and February.
True.
Everything starts in March. If you gotta say, when is your fiscal year for a trader, when the trader has to really pay attention to their trading, that is March. Big fishes they get and they eat everything on March. Then they review it on the first semester. And they say, okay, we're gonna stick to the euro, we're gonna stick to the pound, forget about the dollar. Or they say the opposite.
When is that? When is that again? When they review it again, would that be
now?
June.
No.
Yeah, June, July.
No.
Yeah.
So let's put everything on perspective now, because we have already information for the semester with the activity of the US and the dollar. So I don't know if you heard about the inflation today and retail sales.
Yeah. The numbers are crazy.
Yeah, high inflation, low retail sales, and unemployment is doing okay, kind of stable. So numbers are not working for the dollar so well.
At all.
At all.
Numbers are bad.
Exactly.
Really bad.
So we already gathered enough information to kind of predict if these corrections right now, if the market is really going to revert, like if they're going to move to the dollar or they're going to stick to the euro and the pound. But then what happens? Then once the reversal is done, because this is taking kind of late, shady decisions, not as strong, but they got to do something with the inflation. The US cannot live with such a high inflation. Then what's going to happen? The Federal Reserve is going to say, okay, then we're going to move and we're going to change the rates next year, or we're going to increase the rates next year. And why they do that? So people can take the money out of the street, put it into the banks, so the inflation is going to lower down, slow down. That's a good
strategy.
That's the only thing they can do. They can say it, but they're not really doing it. But people is going to already get the money and put it into the banks again.
Yeah, the power of news. Yeah, people would definitely do that. Yeah,
absolutely. If they use that strategy, then yes, we are facing a reversal situation, probably July, like big one. This is nothing compared to what's coming.
Yeah. Do you think it will be big enough to push the currency into, especially when we're talking on the subject of the euro dollar? You think it will be strong enough to push it into the sell pressure areas?
No.
Not that strong.
No, I don't think so. I mean, if that happens, they really had to say that they're going to increase the rate, and they do it.
And they do it. Okay.
Yeah.
Okay.
If they say it, it's like, okay, corrections. Okay, maybe 50% of the entire move, 50% of it. But not all of it.
All right, I see. So if they put out basically just the idea or the news that they want to raise the interest to get people to put their money back into the banks, we might have like just a larger correction, but not strong enough to take us back into the sell pressure areas.
Yes. And another reason is this: they can do it alone. The Central Bank of Europe is also going to do the same. They had to move in tandem. They move in tandem. Central banks, they move tandem. They move together.
I've noticed that over the years. Yeah, that's true. Very true.
They move together.
The BOJ, the ECB, the BOE, I think each time they make any strong decisions, it usually reflects on all the currency pairs like individually, and then you can see sort of like a ripple effect. Yes. What happens here happens there, even if it doesn't happen exactly at the same time, but it eventually comes. The moves come, it's just like it happens somehow in all the pairs at the same time. Yes. But different at different moments. Yeah,
exactly.
It's
all
incredible.
Central banks moves together. Whenever one of them say we're going to move the rate, all of them start doing that, because it cannot happen. Like everything tends to an equilibrium. The economy works in balance.
Yeah. That's still a concept from the book that I'm still because I got like I think 15 pages of the book, so I've been going through that like throughout the whole whole day. In fact, since yesterday, actually, I've read it probably like 5 or 6 times, you know. So the concept of equilibrium too, I do find that very exciting, actually, because I've never really thought about the markets like that ever, you know. For there to be an equilibrium, I'm telling you, I've never, and it just that one concept alone changed my entire mind. You know, I'm
Awesome.
telling you.
Awesome.
Yeah, it's amazing.
Yeah, because it happened to me. I lost so much, no understanding the equilibrium price. And it's like, why nobody sees this? You know, just get out of the equilibrium prices, get the market, get into balance, but don't get with them. You go with the fish, go with the big fish. If you get into the balance price, the equilibrium price, you're going to be eaten because it's no confirmations, not safe. There's an area where you can get a bad transaction always. So just out of the equilibrium price, but understand it, because if you understand it, you're going to catch the right move after that. The best prices you're going to get after that.
True, true, very true. I'm absolutely excited, absolutely buzzing right now to learn this concept, really.
Yeah.
Yeah.
And also, you know, it's like, forget about candlesticks and charts and it just stresses me out when people is getting afraid because they get intimidated by candlesticks. And I understand. I've been in that place too. It's just get rid of the you know, just focus on price. So what I do, and it helps me a lot, is like, you see the chart, but before you trade, you write down the numbers. So before you trade, you say, okay, I'm in the first hour of the European market. And right before we start doing anything, you know, just say, okay, well, I have psychological prices. Where can I start with a bad transaction? Get in here. Okay. So you write down, for example, let's grab the euro dollar.
Yes.
And then you want to have this type of information. So you got like this. I'm writing this down, and then I'm going to show you.
All right.
It looks like. Okay. So this is how it looks like. I don't know if you can actually see it.
Yeah.
Not really.
Yeah, I can see it clearly.
Okay.
Yeah.
Okay, so you got 2140, 2130,
Yes. 2130, 2120,
20,
and 21.
Yeah, 121.
Yeah,
now
120.
Here, the 121 and below,
Yes.
dangerous area to get stuck with the sell. Dangerous area to get stuck with the sell.
I see.
About 2120, it's okay to buy to 2130, extension 2140. Above 2140, you know what? You don't want to buy anymore because the market is going to take the profits. You're going to get stuck, and because you're still below 121.50, very important psychological prices. So don't move into the extremes. 121, stop selling, and 121.50, stop buying.
Stop buying. I see. I see. Wow. Wow. So how do we identify these prices? You know, because these prices seem to have like a very powerful impact on where we buy or where we sell, you know. So how do we identify them?
What do you mean? No, nothing. I mean, I can show you the fundamentals, why these prices, but just psychological levels. That's it.
Okay.
You grab the 121 because okay, you need to start some point. You need to start somewhere, right?
Yeah,
well, what's the price you have right now on the euro?
On the
you got the 121.20. So this is the question.
Yeah.
Where is the 121.20? What is in between? It's in between 121 and 121.50, right? It's in between.
Yes. Yes.
Great. Now you know that 121.20 is going to push it to 121.30, right?
Yes.
Most likely the price is going to go up now on the euro, right? And then you know below 21.20 is going to try to reach the 121 level.
Yes.
Okay. But then you got the information, the most important information is that what happened on the previous trading sessions, like a few hours back or 1 hour ago or 2 days ago, whatever.
Yeah.
Well, I see that if I move my chart a little bit down the road, I see, well, the market, I was trying to buy really hard, and the 21 and 21.10 just on the previous trading session. The one that just closed right now.
The one that just closed, yeah.
So I gotta pay attention here because I know buyers are pretty serious down here.
Yes.
And that means that if the market gets below 21.30, I'm probably going to start selling around 21.15 down to 21.06, being very careful not to get stuck because I see buyers pretty strong down here.
Okay, I see. I see.
So whatever happens, you don't enter into the equilibrium price. This is the equilibrium price right now, the 21.20. 21.20. Why? Because it's the, well, the central pivot point gives you the equilibrium price. You don't have to guess it. The gray line gives you the equilibrium price.
All right. All right.
And another very important piece of information. So there's two gray lines that you can have very important information right now from the euro. This gray line right here, I don't know if you can see it, which that was the equilibrium price on the previous trading session that just happened today, right here. And
Yes.
then
So the gray line represents the daily pivot on every day.
The daily pivot and also the balance price, the equilibrium price, where you know that above it you got buyers and below it you got sellers.
All right. All right.
So above the gray line you got the buyer, below the gray line you got the seller.
All right. The other levels, because just like you, I completely sort of understood that concept where you explained the buying pressure before the last session, just the last session that passed. So basically looking at the chart and seeing the pressure and then knowing where sellers are settled and where buyers are settled and using that sort of as a gauge for your position placement in sells and buys as well. But those levels that we use, just like on this chart now, we have the 21.11, we have the 21.06, you know, those levels, do we pick them randomly based on the price at those points? Or
no,
we have sort of
not randomly. Those levels, I knew exactly that the market was trying to buy there because of previous trading session. Let me show you where.
Okay.
So I'm gonna go 1 hour time frame. And my question is, well, okay, I got a sale day, I'm gonna sell. And the question is, when I close my eyes, I say, okay, where can I get stuck with that last sale where I know the market is going to try to buy again the euro? Where is the buyer trying to get me on the euro? Where is the buyer trying to eat me as a seller? Where is the buyer taking advantage of that low price, the lowest price of the day, to use me so they can buy? Where can I get stuck with that last sale transaction on the euro so I don't get stuck in there? Wow. Based on those questions, you go and see, okay, let's check it out. Where is the buyer? Where is the buyer? Where is the buyer? So I see here in June, I'm in 1 hour time frame and I'm on the euro. So June 11th and June 14th, well, yeah, you got buyers, but I see kind of the market went all the way down in June 11th, down to here, to the 20.95.
Yes.
But I also see buyers here. I also see buyers here. But if I go down, I keep looking at the buyers in this area. Look at this one. This is what makes me take that decision. June 4th. Look at that. You see?
Yeah, a lot of buying pressure.
That was I think it was Pomsey. It was something. It was an information there.
A lot of volume. That's a lot of volume.
But then again, okay, I see that you know, the buyer here is so ready. They really want to eat me when I get to sell between 21.10 and 21.06. I'm not gonna sell anymore down here, and I don't care how far it goes. I'm not gonna get stuck on those levels. If anything, I'm going to wait for the buyer, or I'm gonna wait for the confirmation below 121. But no more sellers. No sellers between 121.06 and 121.10. That's it, period. Once you got that in mind, there's no way you're going to change your opinion, you're going to change your mind on the way. All right. All right. But this is very important what I'm saying, because you're going to be really tempted to actually sell here. So one thing is to understand it when you see the theory, you read it, okay, beautiful. Once you put your emotions into the market and then you see more sellers and they say, oh yeah, it's going to go down to 121. How fantastic. And that never happened. And you had bill exactly at the price on the euro that the market is going to take you to 122.
Ooh, yeah, yeah,
Right.
yeah. I also see, like, you know, with your explanation now, which is absolutely amazing. I actually see the psychological side to it as well. You know, yeah. I think I got that from your explanation too as well. I do
Yes.
see the psychological side to
Yes,
it.
you guys. Yes, you
Yeah.
guys. I mean, just move with the sharks. You want to move with the sharks. Don't get eaten by any shark. So when you understand how the shark thinks, you're gonna have much easier trading, much smoother. But you have to be really patient. If you ask me what's the best quality that you have to develop for this business, is
Yes.
patient and patient.
Patience. Yes.
If you're a patient person, you're not gonna get stuck ever.
Yeah.
Because you can read the psychology of the market, and they all desperate, and they all like trying to just eat each other and using stop losses and boots and robots and all kinds of things. When you understand the psychology behind it, you can get profit out of all of them.
True. 100%, 100%. I've seen it happen so many times, because starting from my initial journey on the charts and in trading as well, I think that's one thing I try to master first, being very patient, because a lot of times you enter a position and price just comes back to the same place, but before it comes back, it does so much stop hunting that it wipes out the board, wipes out all the market orders, you know, basically kicks everybody off, and then comes back to the same price. So if you were just patient, you would have gotten in at the absolute best price possible.
Yep.
You know, so yeah, that's the first thing I had to master, really.
To be hunted on the market, hunters are real. The stop loss triggers are real. Those
Very real.
tricks are real.
Very real, very real. I believe it 100%, because it happened to me like in the initial stages. And the good thing though, I was absolutely excited for that, was that I didn't really believe in the concept of stop losses. I just knew that they don't work, you know. So I was always looking out for methods, or not, I wouldn't say methods, but a way of looking at the market that doesn't involve stops, you know. And the more I drew closer to that, the more I paid more attention to price. I think now I love price, you know. Yeah, I absolutely love price, because it's the only thing that tells you what's going on. Every other thing is just beside the point, you know. Price is like the only thing. Is the only thing, really. So for this, your levels, I clearly understand it. Like, I get it 100%. But do we select there? Because now I can see like 1210 and 12106. The levels you marked on the chart now, I can see them, and I can understand why they're there. You know, but I don't know if there's any specification, because like the one you wrote down on the paper, is it important for us to get the numbers accurate? You know, because it could differ by like 5 pips or by 10 pips. Does that matter? Or we have to mark out the level? Is there a way to mark out the levels accurately?
Right. Well, it's going to come to the point where you can master prices so well that you just gotta know, and you have to measure the trade. That's going to help you a lot. That means like this. Okay, let's give an example that you're exactly at the most dangerous part of your sale day. It was a sale day, you start shorting the euro, everything fine. Down to what? Down to know what exactly the buyer is waiting for you, so they can eat you as a seller. Instead, you right there, you stop your shorting, you stop your selling, and then you wait for them. You just wait for them, because you know they're coming. Are they coming at the 121? Are they coming at the 120.90? Are they coming at 121.10? Who cares? But here, you don't sell anymore, because you know they're coming.
Yes.
You know? So even if you wait exactly at the 121, 2090, but for those 10 pips to have a drawdown of 120 is not worth it to me.
It's not worth it. Yeah, it's not worth it.
Not worth it. You know what I'm saying? That's it. That's got to be the answer to that question. You know what? 10 pips. And this is my last sale, and the US market is opening, and I'm in the dangerous zone right now. I'm not going to short anymore. That's it. I'm going to wait for the buyer. Period.
Got you. So it essentially doesn't matter how accurate I get the lines, but the fact that I
Yeah.
know where the area is, that's what's
Yeah,
important.
exactly. Yeah, don't get too
Yeah.
frustrated knowing exactly the prices that I show you. Just,
Yeah.
you know, you just saying, you know, between 120, 2110, that's it, no more. That's
Yeah.
it. Now,
Yeah.
let's give an example that you actually get kind of emotional that day and you decide to sell, right? And you get stuck with a sale between 120.90 and 120.95 or 120, I don't know, 88, for example, you know, something like that. You must cancel that if it's taking over, I don't know, 10 minutes, 15 minutes. You have to cancel that transaction. Some transaction you hedge, some transactions you don't hedge. These type of sales, when you are at the last sale and you know the market on the Europe is about to close, you know that this sale is getting dangerous. You don't wait it. You don't wait for it. You cancel. You cancel.
So you don't hedge towards the end of the day.
Exactly. That last transaction before the European market closes, you don't want to hedge that one. You don't want to hedge that one.
So is the criteria the end of the session or the end of the day?
The end of the session. Yeah.
The end of the session. Okay. So and this must also apply probably to the currency pair you're trading as well.
Everything.
Like in this case is the Euro USD. So we pay attention to the European session and the New York session.
Yeah.
Is that the case?
The European session, yes.
Okay.
But also applies for the dollar Canadian. You have to think like this.
Yeah.
What part of the world moves the money? What part of the world moves the economy? The US alone or the European Union as a team, like as a mass of money?
As an entity, yeah.
You know, what moves more money into the markets? You may say, well, New York Stock Exchange or the US market. No, Europe.
No,
Europe,
yes.
always.
Yes, they are.
But if the European market, once the market is starting to close, because it's not just 1 hour, it's like it's going to take 2-3 hours until all the stock market of Europe is closed. But the first hour, and then you have that last transaction and the European market is about to close. You don't want to have that sale, you don't want to have that buy, that's it, that's over for you.
So profit or loss, we just cancel the orders. Profit or loss, we just close it because we don't want to be there after the close of the market.
You know, what I say my criteria is like, okay, I'm going to say this is my last sell transaction. I'm below 121.10. I'm going to sell down to 121. And then I wait like, I don't know, 10 minutes, still 121.10, 15 minutes, 21.12. 20 minutes, 21.15. What am I doing? I know the buyer is coming. I gotta cancel that. I know what I'm facing tomorrow. And then if the market tomorrow open for buyers, my sale down here, it can face a drawdown up to 121.30, 121.50, and why not 122?
True. Absolutely true. Yeah.
Can I just clarify what we call session? So we don't really call like a trading day, regardless of which market we use as a trading day. So we call the
8 hours.
Called the session.
8 hours of market. 8 hours. The market moves when the market opens until it closes is 8 hours.
So as a session, are we using usually London time when it opens 9:30 to 4:30? Is that the
yes?
Perfect.
Yeah. Take London. Yes.
Yeah, London.
And then the other one are just overlapping. Are they?
Yeah, the New York. Yeah, New York, Frankfurt. I think those two overlap with the London open and close.
Well, when the US market closes, you know, that nothing's going on in the market. Like the US closes, nobody knows, nobody cares. You know, like there's no such important money there that makes a difference in the market. Not really.
True. The European Union is a big entity. It's a really big entity.
It is.
What about the Asian market?
So what?
Asian market.
Okay, Asian market is a completely different situation. Asian markets typically it shouldn't have an impact on the activity of Europe and the US. But again, what can happen is that the volatility on Asian markets is kind of aggressive, and it's going to start getting stop losses from people from Europe. And that can change everything. That can change everything. You see?
True.
Asian market, I just gotta keep an eye on it. Just keeping an eye on it.
It rarely happens. It rarely happens that a lot of volume flows into the Asian markets. Asian markets are usually very slow paced. You know, there's not a lot of activity. But when it happens, sometimes in the release of news from the Bank of Japan, like sometimes we see amazingly strong moves that take out a lot of market orders, and then the correction comes in London, and that day just becomes a crazy day. Basically, it's incredible to see, because then you now be like, you imagine, you know, the way the market works is insane. It's really insane. You know, the big players, they really put a lot of thought to how they move money.
Yeah,
they do.
So exactly, Japan, keep an eye on Japan. Those guys are dangerous.
They are very dangerous. I can tell from experience.
Those can change everything. So, but you know, as long as you're safe on the European session, that's it. I take Asia if I see something nice going on with the Australian, but I rather rest, honestly. That's the truth. I don't. Asia, I'm like, I take it if I have a floating, but now not really into Asia.
And just another question is a side question regarding the tradings. Do you have on your, I didn't finish your book, but do you have anything on the strategy as in risk management and something like that?
I believe so. Yes, I think I have a little square on talking about management, where I explain, you know, everything I say every time. Just keep 2 floating transactions. Don't go for commodities if you're lower than $3,000. But yeah, we can talk about it now. I mean, so let's do it.
What I'm asking, for instance, like there is a little bit of how do I want to say, some sort of agreement, or most people would agree with, like percentage, how much of your money you should invest and how much you're willing to risk.
Yeah.
But there's different opinion. Obviously, it's like 5-10%, or depends on how much risk you're going to take.
Yes.
But what's your opinion on this? Some people say you risk 3%, but you only want to lose 1%. But or you risk
exactly.
you make 1%, or what?
Yeah. Well, honestly, I know people that moves into the market only betting, just using 5% of their trading account. And I'm kind of between 20 and 30, honestly. I don't go this low. I'm between 20 and 30% investing on every trade. It sounds risky, but when you know what you're doing, you can move it.
I think anybody, to be honest, just as an opinion out there, I think anybody that hedges has to go within the 20 to 30% as well. I do the 20 and 30% as well. Sometimes 35. I can be aggressive with 35 to 40 as well. Yeah, I can't get very aggressive. So I'm a very aggressive trader.
Yeah, I mean, it's because it's like we are in leverage markets, and leverage markets gives that opportunity. So if I can make, I don't know, $150 a trade, I'm not gonna go for only 20. I'm not gonna go for only $10.
True. That wouldn't be logical.
You know,
it wouldn't be logical at all.
So that's the thing. That's the thing. But what I suggest also is that you use the lowest, let's give it a quick example here. Let's say you have $3,000, right? So you know, one standard lot, you know how much that is?
Yes.
Okay. In 1/400, how much is it?
I think that's 260. Yeah.
It's between 260 and 250, because if the base is on the dollar or the base is on the euro, it's going to change a little bit. Okay? So one standard lot on 1/400 with one financial, for example, one financial market is 260, 250, one standard lot. So basically you're using that much from the 3K, which is a lot. You don't want to go here.
It is.
You don't want to go here. So at first, and this is very important, at first, remember that you're working in your trading habits, your trading strategy, your emotions, everything. So as long as you the less you think, the less emotions you put into the market, the better you're gonna go in the long run.
True.
Better you're gonna go in the long run. So
Very true.
if it's going to get your nerves working with the 260, don't go here. Don't go to 260. You want to stick to the $20. You're gonna stick to, for example, 020. 020 is a perfect lot, is a perfect measure to start. The 020. That's it. 020.
Yeah.
And that will be around $20 that you're
Is
using from 3,000.
Is that your broker they use, UXM or something like that?
One Financial Markets, and yeah, the ones that is giving you 1 to 400 average.
What is it called again?
One Financial Markets.
Is that the name of the broker?
Yeah.
That's the name of the broker. One
Yeah.
Financial Markets.
They're from London. If you want to go with them, let me know. I mean, I've been using them for like the last 7 years. Never
I'll
a
check
problem.
them
I love
out.
them.
I use Capex or Capex. They are, I think, from Cyprus, but they have offices somewhere else in Europe.
Yeah, I heard them. I heard them. Look, if they work okay with the execution and the scalping, that's okay. You're gonna
Two very important
I
things.
didn't have a long experience with them because I came to the point where I had a bad experience. So I'm pausing trading until I recover some money.
Oh, okay. Okay. Yeah, that's a normal phase, to be honest. I can relate to that. It's a
Yeah,
normal
me
phase.
too. Who never been that point, you know, like.
But this one that you mentioned, obviously you are for them a professional trader. Is that why you get 1 to 400 leverage?
No. Everyone gets to 1 to 400.
But how could it be a London broker?
Oh, yeah, good
offering?
question. Good question. Because they got to route their clients towards the Vincent Island.
St. Vincent, yeah.
Yeah,
Vincent.
St. Vincent.
Yeah.
So they
Yeah.
But
wrote
that means they are not under the FCA.
They are.
Yeah.
So your money is in London, but the jurisdiction where you sign the account is not in UK. It's in St. Vincent.
Yes.
So you can also sue them. You can also make trouble with them, but when you sign the account, it goes to St. Vincent. Otherwise, they'll give you 1 to 50, I believe, and you have to be a
I think it's
professional.
up to 1 to 30, if I'm not mistaken.
Yeah, something like that. You have to be a professional trader.
Yeah, I have an account with One Financial Market, but I've not been able to use it cost from my current location. I think I used a link that Karina, you sent me some time ago to open the account, but I've not. Yeah, I've been able to verify it like a long time ago, probably about 2 years ago, but I've not been able to make a deposit because the method of payments are not like available from my country, like because
But
of
I can
my
do that for
location.
you. Listen, I can move my money from my trading account to yours.
Oh, I see. I see.
Arrange it.
Oh, I see. Okay, we can talk about that later.
I'll do that all the time. So
Yeah.
here, what are we at? Okay, again, you move 020. 020, trust me, is the perfect number. It's not gonna get into your nerves. It's not gonna get into an 020. You go for 020. If you have 3,000, 4,000, 5,000, go to 020. You can add one more trade if you get confident. One more with 020. It's a perfect number. It's not going to get into your nerves. The drawdowns are soft. The profit is good. You're going to be happy with it. 020. Stick to
So that must mean that I'm extremely aggressive, because I go like at I think 2,500 or 2,000. I go at 2,000 with 1.0.
2,000 with how much?
Yeah, 1.0. Yes.
What?
I do. I do. And I use a leverage of 1 to 500.
Okay. And how's it working for you?
Pretty good. Pretty good. I think it's because I've been doing it I've gotten used to that lot size. So it's even when I go to smaller accounts, I still want to use that lot size. It's like an obsession. Yeah. It's like an obsession.
Yeah, if you can manage your nerves, that's it.
Yeah, it's the nerves. You're very right about that, because there was a time where even the 0.1 used to make me shit myself, But then I got to the stage where I began to open 1.0s and it was easier, and then, I think it's just the nerves really, but it comes with time too as well. It comes with time, a lot of time. Yeah.
But that means when you open a trade, It's
Yeah.
supposed to go in your direction more or less straight away, because if it does fluctuate a little bit, it
Yeah.
could burn your account,
I
considering that it
mean,
has leverage 1 to 500.
yeah, it's like I said, it's extremely aggressive, but
It is.
yeah, it is extremely, like, it's at the very edge of aggressive. It gets to the very edge of aggressive, but I don't think it's for everybody, to be honest, because some people will freak out. They will freak out at that lot size. But I manage it. It's something I do on a day-to-day basis. Just that I'm really infatuated by hedging. Like, it's something I love so much, so I can't get enough of it. Like, the moment I hear somebody speak about it, I'm like, yes, finally somebody that knows what they're talking about. Because I've been around for a while. I've been trading for like 6 years, going to 7 years now. So a lot of the experiences I've had is people talking a lot of bullshit about trading.
Oh,
And each
yeah.
time, yeah, a lot of bullshit. And I'm like, there is no solution to the markets if you cannot hedge out your trades. There's just no solution. Absolutely not. Because there will come a point where moves in the market are unexpected. You can't foresee them, no matter how good you are as a strategist. And how can you prepare for such a thing? Like the Swiss franc fall in like 2007, I think, or 2013 was unexpected. I think it broke hedge funds, basically.
Yeah, it did.
So yeah.
It
So I
broke
don't.
everybody because the banks had a deal between them before. We know
Yeah.
these are the levels we operate, and
Yeah.
then when they took that over, it just broke.
It was it was
many,
absolutely
even broke. Many brokers took them out of
Yeah.
the market.
Yeah.
Many hedge funds, many
True.
because
Yeah.
just the bank agreements in between them, and then that's it.
Yeah, it was absolutely unexpected, and I think that's the whole point of the. Each time I speak with Karina, I tell her, but maybe she thinks I'm over exaggerating. But it's a great thing when she's like the way she's professional about managing the hedge. I think is like a perspective to the markets I've never seen before. Because that just it sort of not just gives you confidence, but also helps you understand the flow of the intraday activity as well. And I think that's helps keep your psychology in check. And everything about the markets is like 90% psychology, just 10% skill, to be honest, from my experience.
Absolutely.
Yeah.
Oh, yeah.
Yeah.
So, well, the point that you mentioned about expect the unexpected, that's why when you open a trade, when you are in the market, get a hedge somewhere. Get a hedge somewhere. We always been in that place where you start trading, nothing's going on until that day that someone is saying something or unexpected decisions are going on. So at least you are hedged, and then you know what to do.
True.
Always, when
Very
you
true.
open a trade, get a hedge
true.
somewhere in the highest. Always a
Very
hedge
true.
there. Always.
Yeah.
We don't
Yeah.
use stop loss, so you gotta protect yourself somehow.
Very true. Very true. That's right.
Alrighty, guys.
Yeah.
So are we cool? Can we have we'll try to make some exercises, right? So you have a clear picture when the market opens, how the market opens, the average price. Take notes. Notes will help you a lot.
Very true. Very true. I do have one question though. I think maybe it's because I missed the last lecture and I've not had the time to catch up on that, but I will definitely do that today because I didn't know it was uploaded on YouTube. I just found out like today, just like few minutes before the webinar. I'm like, oh God, there's a link to the webinar on YouTube. I was absolutely outstanding. So I'm gonna go watch it maybe like 100 times. But essentially, I want to know, like, at that open of the market, how do we tell it's a buying day or a selling day? Because there's something that tells us like, oh, today's a buying day or today's a selling day. At least for now, I can understand the criteria for the buying pressure and the selling pressure areas of the market and how we see corrections and how they differ from reversals. But how do we tell from the first few hours of the day or the session that, oh, it's a buy session or it's a sell day or it's a buy day? What's the criteria that tells us, in this momentum, the market is going to have more moves or we are expecting higher prices or something of that nature?
Right.
Yeah.
Well, you have to consider the first 15 minutes. Once the first 15 minutes is completed, and then the market is giving you a high. That's the high. Once the first 15 minutes is completed, that's going to be your high, and then you wait for the next 15 minutes. But the most important thing is you got the sellers coming, if it is a sell candle or if it is a buy candle. But most importantly is what price the candle is closing. What price the candle is closing. So let's say you have the 121.50 on the euro, and the price, the first candlestick on the 15 minutes, it closed in a sell candle below 21.50. That's everything telling you it's a sell day. And that means you got the high, so you start selling and shorting. Let's think the opposite. You got a buy candle, on the first 15 minutes of the opening hours. The first hour is going to tell you if the market went shorting the euro or buying the euro. Then you're going to narrow it down to the first 15 minutes. But if it is too confusing for you, that you don't have a clear picture if the day is for the buy or for the sell, wait for the first hour. The market is also, whenever they take on the phone and they start taking orders from the big fishes, they don't go to the computer and say, I'm going to buy the euro. They have people doing that for them.
True.
So they say, you know what, I need a transaction for this amount of money. Let's go for the euro. And then the bankers are going to tell them, yeah, we are at, below 122. It's a good moment maybe to buy, or it's a good moment to close your trades, or it's a good moment to do this and that. And psychological levels are everything. So the first hour, if the market is below certain psychological price, it's a sell day. If it's a buy day.
All right. So basically, if I should summarize your the point you made, we must have the psychological levels denoting the buy and sell areas. We must have that already on the chart before the open of the markets. We must have that on the charts.
Yes. Yeah. Let's say, for example, that we're trading in London hours. Let's put yourself in the position that we are in the first 15 minutes of the London opening hours. Okay? Great. So we're here, whatever is the time in your country. For me, it's like, I don't know, maybe 4 a.m., 3 a.m. Okay, so here we are. And let's give it a shot. So here we are. We got the euro dollar, and it's shaping like a blue candle, like a buyer trying to push the price. Okay, what else we got? We got the pivot point down below us. Okay, what else we got? We got 121.20 below the market price that we have now. Okay, what else we got? We got above us the 21.30. My suggestion is going to be like this. It's going to be a buy day. We have the market above the pivot point. We got the price and the 121.20. I'm not going to use the first confirmation here. I'm going to wait for 21.30. The reason is because we are still below 22. The market, I see that the previous trading session was pretty aggressive into sellers. I'm not going to take the 21.24 right now. I'm going to wait to buy at 21.30.
I see.
Okay, so again, we are on the first 15 minutes of the UK opening hours, and I see the buyer trying to push the price. Okay, I know it's going to go up. I'm not going to take these first 15 minutes. I'm going to wait for more 15 minutes, ideally the 21.30. Why? Because at the first 15 to 20 minutes, everything can be upside down for you.
True.
Give it a time. Give it some time. Don't rush on that decision. That's very common. Why? On the first hour, you're going to have one confirmation, and the next 15 minutes is going to lose the confirmation right there. Right there. And what could happen is this. Then the next 15 minutes, you're going to have the price down here below 121.20. And once you know it, you're below the pivot, you lost the confirmation, and you're already in the market, and you missed that day. You totally missed that day.
Yeah, because you should have been on the sell side, not on the buy side.
Exactly. So you you move too fast. You do not give it time. Again, just take it. What I do is like I see it, and then I see it, and then I see it. But I don't make it. Once I put it in my mind, what I'm going to do, I don't take the decision there. I go outside, I sit down, I see the chart again. I go grab a coffee, I sit down again, I see it. Once I make up my mind, maybe everything changed for me.
True.
So the opening hour is the key momentum. Don't waste the 2 hours of the most important moment in the market rushing on a trade.
It is the most important period of the markets. Actually, it is.
Once
because the banks are essentially opening at those exact times. So money and volume flows into the markets.
In your mind must be the question of where is the fish going? Where's the fish? The big fish is going today. Where is the big fish going today? What are they going to do today? What are they going to do today?
Yeah.
What they did yesterday? What are they going to do now? Are they actually going for the euro again? Are they actually just pushing the euro, but then they're not holding anymore? What are they doing? Thinking the psychology of the market on the opening hours, because you have nothing else. Doesn't matter how expert you are on trading.
Yes.
You can get to upside down in 15 minutes.
100%.
So all the theory, all my book, it can be trash if you're not enough patient. Not enough patient.
You're right. You're right. I 100% believe that. Yeah.
So Karina, you trade in mainly the London market?
No, I use the US market. Yeah. On my first desperate years, I will do both. I'll do the opening of UK, I'll do the opening of the US. And then I started to value more my emotions and the stress and everything. Once I took that step to say, you know what, I'm just going to be more relaxed. I'm going to focus on the overlap. And actually, I started making more money than I was before, expiring transactions, moving the wrong way of the market on that first hour of London market. That was stressful, no reason. Now I use just only 2 hours of my day. I don't do both opening hours. I just do one, the US market.
Can I ask you something? Because maybe I'm wrong, but from what I see on most charts, the biggest movements are on these overlap. When they overlap, when the US opens and the euro is already open.
Totally.
For example, like Europe opens 9:30, but the biggest movement is when the US, or close to that time, when the US opens as well.
Yeah, the UK market is pretty aggressive. I will say that the UK market, I mean, European market hours are as power as the overlap. I can say that, you know. But if you think into money terms, of course, it's going to move faster because the money of the US market is adding into the market of the European market. So you pretty much add more money into the market. So it's supposed to be, you know.
Yeah, bigger movement.
More volume.
Well, eventually, I think I would even say adore. I adore the concept of being able to tell, because earlier on, I've never really looked at the pressure from the last session. I think that's one of the biggest things I really got from here, like the pressure from the last session as to where there were sellers settling and where there were buyers settling. It does play a significant role in the next session and also in the next day as well. You know, so in regards to that, I want to know, is there a limit to the number of levels you mark? Because just for Euro USD that we were looking at earlier on, you had like 3 levels above, 3 levels below. So could we have 4 levels above, 4 levels below? And especially in the one you wrote down, the paper, basically what you said is important to do on a day-to-day basis, writing down the numbers. I honestly agree with that because I've never done that before, but it looks exceptionally great, because when you can find the numbers, you can also tell an equilibrium of where the pressures might change and where you should definitely not, most importantly, not open some certain orders, you know, so that you don't get trapped. You know, I think that was the best thing ever, you know. But in evaluation to that, do we have a number of levels? Because I could see in my head, I could see the equilibrium shifting throughout the day, because there are some days where so much liquidity flows in from news, from events that happen, even from things like natural disaster. There may just be a natural disaster in the country and it shifts the entire price equilibrium. Like there's such a move that we have never seen before, and it changes even the ADR of the day, the average daily range, you know. So certain things, certain parameters begin to shift. So in such situations, how do we adjust to the circumstances in terms of finding the buying pressure and the selling pressure and those areas?
Okay.
Basically.
Yeah, one thing is this.
Yeah.
The news cannot change anything in the market. It's going to be volatility that eventually is going to move again to the equilibrium.
Yes.
It's going to take 1 day, 2 days, 3 days, doesnm matter, but it's not going to change the rules of the market.
Yes.
Terrorism attacks, storms, climate change, whatever. You know, it's not going to change the economy. It's not going to change the economy. It might impact longer or less, you know, in the Suez Canal, that impact in the market for a little bit.
Yeah, true.
But again, then everything moves again to the equilibrium. So, You had to,
I think,
just,
yeah,
just new,
yeah,
whatever.
yeah,
As long
yeah.
as
I
they
think,
don't change rates,
yeah,
they can do, anything can
yeah.
happen.
Anything can happen. Yeah, basically anything. Yeah. So I think the right word I would have used is not really news per se. I would say volatility. I think that's the right word. Volatility. So basically, I think for me personally, from my experience over the years, I just see news as an excuse for them to make a move on the charts. But if you focus on price itself, regardless of what move they make, or what excuse they use as the move, I just see news as the excuse, because price is going to do what price is going to do. But if you focus on price, you'll be able to follow it. So I think, like, in a better case scenario, I would say volatility. In the case where we have so much volatility in the market that it changes sort of the dynamics, do we begin to adjust our buy and sell areas as well? Do we begin to adjust it?
Yeah, totally.
Yeah.
Yes,
All
we've done
right.
that. We've done that. Guys,
Yeah.
there's another meeting coming up. I would love to stay longer, but I gotta use the system for Spanish people now.
Yeah, we would love you to stay longer.
Yeah, that would be great. So I'll see you
Yeah.
Monday. I'll see you Monday. Yeah.
Yeah.
Definitely. I'll send you an
Definitely.
email. Maybe you can have time to reply regarding the
Please, yeah.
broker.
Everything. Caleb, send the email. Joaquin, Sam, Ioannis. Just I'm there for you. Okay. I gotta start the
All
other
right.
meeting.
No problems. All right.
Thank you,
Thank you for
Caleb.
having
You're
us.
really, really
Yes.
useful to today's meeting. I love your
Yeah.
enthusiasm too. So.
Thank you very much. I appreciate you as well. I do.
All
I
right.
really
Thank you
appreciate you
so
as
much,
well.
guys.
Good
Bye
day.
bye.
Yeah.
Bye for now.
Thank you.
Yeah. Bye. Thank you for your time.